Yeah, can do. Good afternoon, morning, evening, everyone. My time zones are a little bit messy this week because I'm sitting off in Canada at the moment, and it's really early in the morning. So bear with me as I go through the rest of the session. But as a human walking identity crisis, I'm a financial services native. I've looked at it from different angles: product and engineering, capital markets, public policy, and then have landed in venture with a very specific mission to invest in female founders who are building businesses within fintech and embedded finance. And that's really important because I think one of the things that I've realized across my journey is that representation and inclusion are the only bits that's going to solve the lack of capital access. And that's been a really nice sort of boost into the hypothesis that we've put out there within Anthemis's Female Innovators Lab Fund as well. The company that I work for in the VC fund is called Anthemis. We are a fintech and insurtech domain expert and a full stack asset management platform. Our core expertise lies within venture, so we've been investing in startups like yours since 2010, and we've invested in companies like eToro, Currency Cloud. Thanks for the link, Paddy. And then Flock and Pipe. And I can go on about the portfolio companies, but also we've grown on since then to kind of realize what other areas can we add value in. So Venture Studio, where I sit in at the moment, is also another product that we have. Then we've got late stage investments, public equity products, and essentially really just want to map the journey of a founder from inception to IPO. Shout with any questions about Anthemis. Our thesis is centered around embedded finance. So we really do think of fintech as a horizontal that could essentially plug in with every other industry and supercharge revenues. Absolutely fine to hear pitches from everybody who's looking at fintech or not. I think it keeps me honest about the entire industry anyway. So excited to be here.
Thank you so much. So for everyone who's been here for the past few weeks, we've obviously done a lot of focus on speaking to users, user engagement. And so one of the questions that we're asking every investor, and all investors have a different opinion on this, is what you like to see in terms of metrics or proof of early engagement from users when they're pitching at the very earliest stages. So if you've got a pre-seed founder coming to you, what kind of proof points would you like to see from an engagement perspective?
Yeah, it's a great question. And I think one of the things that I wanted to say at the outright is that I do work in pre-seed seed, so I know what it's like to just start out and not have a lot of traction to kind of say. And it's sort of a catch-22 that we almost always go into, where investors go, "Oh, I'm not seeing very many traction metrics that you've put forth in your pitch deck or whatever else." But really, I do want to challenge that whole fact to say that when you're starting out and it's a pre-seed startup, it is pre-seed, you're not going to have enough traction. I think what you do need to show is that there is a market need and that you're the right people to solve it. But that said, as you then kind of grow into seed, Series A, and even if you're not doing a VC sort of journey within your company building journey, as you grow into pre-revenue, from pre-revenue, pre-product to having a product, getting your first couple of revenues in, I think taking a long-term view and applying what I like to say evidence of hierarchy in scientific research is something that becomes really important. So a couple of years ago, there's a US pre-seed seed fund called NFX that published an article that I'd recommend everybody check out. It's called The Ladder of Proof. And essentially what that does is it identifies, as you go up in your startup journey, what does that ladder of proof essentially entail? It's quite neat because if you're essentially aware of your place in the ladder, as they call it, you can communicate that to investors. You can essentially recruit employees, you can build your team, and you can even do your PR with it. And then I think the neater bit is you can even identify which VCs are right for you if VC funding is what you're looking for. And when I start with the ladder of proof, essentially, the idea is that each sort of rung of the ladder will try and tell you what is a predictor of risk or success, right? And as you climb up the ladder, you need to be aware that you're sending out more signals to investors than you did before. So if I start right at the bottom and literally just reading out loud the ladder of proof, because it's very interesting and very relevant, especially in this market, right? So you start with the customer need and big market size. You've got a great team and you're tackling a really good idea. But then as you kind of go forward, you do need to start showing your ability to build and execute on that vision, right? So have you been able to actually get customers who are active users in the start? And then have you been able to get those customers to stay with you for a bit? And if they have stayed with you, have you gotten them to pay? And then as you're starting to scale, how do you think about unit economics in a way that your cost of acquiring those customers isn't perpetually increasing in relation to how much you're actually getting them to pay, because otherwise it's not a sustainable business. And then all of the other metrics that get thrown around all the time, things like LTV and CAC and ARR, will start making sense, if that makes if I can just sum it up that way. And the only last thing I think I'd say is that I've seen this way too many times, even with portfolio companies who, are preparing for fundraising in the next stages, that it's very, very important, even in this market, to be able to prove your metrics. So it's great to have a vision. It's great to have that sort of naivety around the vision. That's why we love pre-seed founders, right? Because you're here to prove us wrong and challenge status quo. But proving out those metrics is the only way to try and build a sustainable business. So I'll pause there. I know that was a lot of conceptual downloads.
If anyone has any specific questions about that portion, feel free to drop them in the chat and I'll make sure that we get them covered over the next few minutes. So when you're saying at the very earliest stage, you're looking at the kind of opportunity a bit more, so the market opportunity and market size. When it comes to total addressable market, is there any number that you're looking for or that would put you off? Like, is there anything that you're like, okay, that would be way too low, that we can't see a return, and so we're not going to take this call forward after seeing a deck? Like, what should people be aiming for with that number?
Yeah, great question. I honestly don't think that there's a very straightforward answer to say this is the golden number, but I do think that if anything is below in the billions or the early billions, it doesn't provide, I think, attractive enough opportunity for any VC fund that's over a certain size. Because to what Paddy was saying, calculating returns at the back of that is really hard. And what do I mean by that? So the way the VC fund is essentially making a return is the fact that every company is able to generate revenues and over a period of time create value for their company, which then increases their valuation, which then means that the $100 that I put in the startup has magnified to 10,000. And that's how I make my return. And so the intrinsic value calculation is done that way. And we've got models that we kind of then run to say, okay, opportunistically, this is sort of the direction that I'm heading towards. However, one of the things that I wanted to stress on, and which is where a lot of founders I find trip off sometimes, is the TAM calculation itself, right? Because you can put together a TAM of $1 trillion because that seems attractive enough for a VC. However, is that realistic and specific to the problem that you're tackling? So very simple example of gap in the market. Say you're a B2B business and you're selling to businesses and meeting a very specific need for them. And the whole idea is you're going to try and reduce the cost that they incur, right? And if it's a B2C business, same logic applies. The whole idea is you're going to try and reduce the cost that a person incurs or spend, essentially, in other words, right? However, the real metric and the revenue opportunity lies in how much of that spend is actually going into your pockets, right? Rather than the whole spend criteria. So if I say my total addressable market is such, that's fine. Great. That's the amount of money that the business would spend to do this activity over a period of time. However, how do I boil that down to the revenue opportunity for my particular company? If I am to sell a particular service to a company or a person, how much of that service am I actually able to take home? That's my sort of revenue opportunity. And then comes my profit opportunity. So when I say, I don't know, equipment sourcing, right? You're doing a service by sourcing equipment for somebody or a company, but the price of the equipment isn't something that is going into your pockets. You're sourcing the equipment. It's something that will go to the provider. So if you've got I don't know, an air conditioning that you're ordering for somebody's business, and that's basically your service provision, the extra bits that you're doing around that equipment is what goes into your pocket. And so I think boiling that down is really, really important, especially as you illustrate to VCs what that revenue opportunity looks like for you. So, and then the other thing that I'd add is the TAM and how that grows is often something that evolves as you evolve your idea as well. So when you think through and perhaps there's a sliver that allows you to capture a different market opportunity or an adjacent market opportunity, and you might be able to do that as you grow along. So it's not a fixed number either. So always be evaluating what your TAM can be, depending on which geography you're operating in, what products you're launching, and keep yourself honest about that.
One of the questions that I was going to ask next is kind of linked with the questions that are coming in on the chat as well. So I'll try and summarize those. One of the things that we hear a lot from early stage founders when they're pitching pre-seed is that they're trying to communicate both the big opportunity and the end goal for the business. And they're trying to pitch what they do with the pre-seed investment to get to the next stage. And communicating both things in the same deck gets a bit confusing because they're like, well, do I just go for the big opportunity, but that's probably not going to be until I'm, Series A, or do I just start where I'm starting now? And it kind of links in with the TAM, I think, as well. Like if you just start with the UK and your pre-seed deck, do you just have your TAM as like the UK market, or do you have it as the global market because that's what you're going to evolve into?
Yeah, great question. So I think there is this concept of TAM, which is the total addressable market. Then you've got the serviceable addressable market, and then you've got the serviceable obtainable market. So a lot of founders use that method. But I think the way I like to think about it is articulating the grand vision is especially important at the pre-seed stages, because that's what is going to get investors excited about what your startup is going to look like in 10 years, right? When I'm investing with a horizon of 10 to 12 years at a minimum. And that's what venture in general looks like now. It used to look like 7 to 10 years, but the whole timeline's expanded a little bit. And so what that then means is that I really want to be sold on that big vision. And what then I want to see is how you're going to get that vision. I'm not expecting get to that vision. I'm not expecting you to start grabbing at all aspects of that vision right away, right? So a simple example of payments company Square. So their whole idea initially was to have a POS terminal. You wave your phone and you get that payment through. But they've since then evolved to tackle what their broader vision is, which is to make selling frictionless for small, medium businesses, right? And in order to get to that vision, they've launched an app, which is Cash App. They have launched broader sort of vendor management and accounting systems, which kind of sit within the terminals. And there's different ways to kind of then generate flywheel effects within the Cash App ecosystem, which is brilliant, I think. So I think articulating that in a pitch deck means you can essentially say, and I always like this slide, which goes like a funnel, if you might, or a different stages slide. So you can always say that, right, this is where we're going to be in 2027, 2026, and that's a big vision. This is where we're at today. And these are the sort of potential hypothetical paths that we'll take, right, in stages. And there you can also weave in your little TAM numbers and say, okay, that's the TAM that we're actually going for. But we're starting with one simple wedge, and that is the wedge that's going to allow us to capture the rest of the market. And that is the wedge that we're particularly good at executing. And we think that that is the one that will help us build customer credibility enough to then capture the rest of the market. And that's the story that I think often gets missed out in this whole TAM versus where do I start first conversation. I wanted to address the regional bits as well from a UK and I think elsewhere perspective. That could also be in your product roadmap, right? Or your vision roadmap, if you might. You could say that we're starting out in the UK, but the ambition, and oftentimes I've seen this in the deck where everybody says they're going to go global, but do you really want to go global is something that we're now starting to question. And are you the best people to take this global? Number two. And number three is, say you're building a very specific product. So how can I illustrate this? So say pensions for the UK, right? If you're building a very specific product for the UK market and you've said in your deck that you want to expand to the rest of Europe, hypothetically, I want to then know, okay, is the product scalable enough? Can I lift it out of the UK market and just put it out in say Germany or in the Nordics with the same model? And if not, then what is the heavy lift? Because that heavy lift then gets baked into my timeline of how I see your company growing as well. So that is what goes on in my head when I think about looking at businesses that say, oh, we're going to go global. So I don't know if that answered a lot of the questions, but I was hoping to tackle different bits.
I'm going to jump in with a question. What's a red flag that usually comes up during the first meeting? And then what's a red flag? I mean, you've touched on a few in terms of market size and scalability and the team, but that would come up in a deck or an email that would instantly be a deal killer.
That's a great question. I think, I haven't had red flags in a way that I initially sort of take a look at it and go, no. But I think there's a very interesting way to think about it as well. There's things that you can, it's kind of like a sales process approaching your VC, right? So there's a few things that are definitely turn-offs. I wouldn't call them red flags, but turn-offs and definitely yellow flags. Getting someone's name wrong, or pitching something completely different to a VC that probably doesn't, and you should do your research on a VC before you reach out. You do that for your customers as well when you're selling to them on whether it actually fits their thesis, right? And if it doesn't, then there's absolutely no point. On the flip side, what's happened is and there's so many clever founders who've reached out to me, and like I said, I generally am passionate about female entrepreneurship. And so if you just reach out and say, hey, I know this doesn't fit within your thesis, but would love to just hop on a call, get some advice, and then see if, you can refer me on to somebody in your network. That almost always works. For me, may not work for everybody, but that almost always works. In terms of the yellow flags, I think I more than go out to, one other thing on sort of the cold approaches and something that's a little bit of a turn off is just a long ramble on emails as well. I think when you're trying to go in cold, best practices are almost always to be succinct, tell exactly what you need from that conversation, from that VC, give a crisp description of who you are, what your startup is, where you're at in terms of stages, and what you're looking to do in terms of fundraising, right? Because that's probably the only reason why you're reaching out to the VC. Being indirect, saying, oh, I want to build a relationship with you, or hey, you should check this out, is great, but it's also a bit of noise because we're receiving so many emails, all of us, on a daily basis. So you want to maximize the time of attention that someone's paying to your email. And then on the yellow flags bit, one of the things that often turns out to be a yellow flag for me is when I'm looking at somebody's deck or when they're sort of pitching me, and this is early in the program for you guys, but by the time you actually end the program, I think hopefully there'll be some nuts and bolts that will be baked into it. And the yellow flags in sort of a pitching process is you haven't necessarily been able to articulate your market. That's one. You haven't, and a lot of people miss this out as well, you haven't been able to articulate how you're going to get to that market. So go-to-market distribution is almost always missing from decks. And this is just such a low-hanging fruit, I feel, that you can address. And then I think third is accepting a yellow flag during a pitching process is accepting you don't know what you don't know. Same with investors. It's we don't know what we don't know. So to say, hey, this is the initial hypothesis, this is what I'm thinking, but I'll need to dig in a little bit more, is completely fine. And I think that's the bit that distinguishes really good founders from founders who, we don't necessarily invest in.
We had one of the co-founders of Olio in a session last week, and she said the exact same thing. When they raised their seed round, there was so much that they just had to say, we don't know, but we're a good enough team to be able to figure it out, and wolf them. I have a question on due diligence. What are normal things that, and let's say early stages of due diligence, that the VCs will ask for? What's normal and what is, I guess, not normal for an investor to ask for?
Ooh, okay. The normal bits are a little bit easier, I guess, but I have some ideas on the not normals as well. So the normal bits, at least so we're usually the first checks into female founded companies. That's how the Female Innovators Lab works, which means that we're aware of what we can see and what we can't. So that stage, and when I say first checks, essentially first institutional checks. So at that stage, what we're usually looking for is a couple of things. So big market size. Is it at least in the sort of beyond the early billions? If that's a market that we're supremely bullish on. And I'll go on a little tangent here if you'll bear with me. So for Anthemis and the Female Innovators Lab Fund, there are three vectors that I like to think about when I think about the thesis. So the first vector is the classical fintech. So you've got your payments, retail banking, business banking, etc. And then the second vector is, how does fintech marry into different verticals, which I spoke about earlier, right? So think agriculture, think fashion, think media, think e-commerce, think marketplaces. How does fintech sort of supercharge your revenues and make you a business that succeeds in the longer term? So it's really baked into your business model. And then the third vector, which is my personal vector, is which I think Anthemis has let me apply as well, is the pressing problems of our lifetime, if you might, right? So climate change, what are we doing about that, and how can fintech help there? Supply chain and constraints that we just haven't looked at forever and now are under pressure. How does fintech help with that? And then the last one is workforce equity. How do we get women back in the workforce and not make caregiving and having a career a zero-sum game? It isn't that obvious, but we do need fintech solutions to be out there to enable these products. So all that is to say is that if you're able to then articulate that market and the area that fits within this thesis and make it really excitable for me, then that's one thing that I'm obviously looking for. And then the second is what is that solution, and is there a sustainable way to build a business off the back of that solution? And when I say sustainable, all I mean is that, are you going to be able to survive downturns like these? Are you going to be able to still stay a company in the next 10 to 12 years, kind of going back to my investment horizon piece? And then I think the third big ingredient to that is, are you going to be able to do it in a seamless way as well? So that basically means that, are you the most effective team to execute on this vision? So these are the three sort of ingredients that I think are most important. Anything else is just peripheral, kind of attached to these bits that we drill down on. I think the last thing in terms of the not normal stuff is, at the pre-seed stage, I know it's great practice to have a data room, but yes, we're looking for, the market, and we're trying to compare who else is out in the market. So to the extent you've done a competitor analysis, and to the extent you're very aware of your place within the market, that's great stuff. But I wouldn't necessarily have you do like a financial projection model down to, like, I don't know, 5 different levels for the next 7 years, because at the pre-seed seed stages, it's all made up anyway, and we do know that. So to the extent you're able to articulate, okay, this is how I'm thinking about pricing the product, this is how I'm thinking about growing the revenues, these are my unit economics, that's a lot more important to me than a full-fledged financial model, if that makes sense. Because I'd much rather you focus on that and tell me how you're going to work through it, because for the Female Innovators Lab Fund anyway, we plug in as an extended team to help you do that. So yeah.
Wonderful. We're going to move on to pitches very shortly, so raise your hand if you would like to pitch. But last question from me. Would it be normal for a pre-seed startup, let's say they're getting their first check from an angel or Female Innovators Lab, would it be strange to be asked for something like their cloud accounting software or bank statements? I've seen that come up a few times in due diligence, and founders are trying to gauge, if I'm super early, I have hardly any cash. Is that a normal question?
I would not think so. That seems like more of a verification check, but that's, I'd imagine, if someone's asking for that, that would be a very red flag, but asking for the purpose of it's obviously the first thing. The only time that I think that we might have looked at bank accounts / address checks is once we are thinking of wiring the funds, and this is just a compliance and regulatory check that we need to do. But that would have happened even if I'm joining a company, and it's a more sort of, oh, you're a new person and we need to validate that you're not engaged in criminal activities. But other than that, it sounds really weird to just ask for cloud account statements.
Okay, we're gonna move on to pitches. Also, I apologize, I lost my voice this morning, so I sound very shaky, but sorry for that. Okay, Catherine Ann, you're going to be up first. 2 minutes to pitch, and then we'll move into feedback.
Thanks. Hi there. I'd like to talk to you about life admin, household accounts, personal paperwork, life laundry, whatever you call it, we all have it. And today we have even more than we've ever had before. So that's documents and information that we tend to store in boxes below the beds, apps, platforms, cloud storage, and so on. The net result is we often can't find what we're looking for, we miss things, and we suffer overwhelmed from the chaos of it all. And this is a real problem. Do you know that average person is spending around 32 hours every month just keeping on top of it? The average family unnecessarily losing over £100 each month, and things like forgotten subscriptions, warranties that they've forgotten they have, or even for fines for stuff that's fallen through the net. And around 50% of people in the UK are suffering stress as a result of the overwhelm. I'm Catherine Ann, I'm the founder and CEO of Docket. And while I was going through a divorce and my daughter's clinical diagnosis while working full-time, I found myself literally drowning in paperwork, and I couldn't find anything to help me. So did some research, confirmed that it wasn't just me and that this is a global challenge, and knew that someone had to solve this problem. And that's why we created Docket. Docket's like Dropbox with a brain. It's a single place for people to manage their life admin that will help reduce the time, the cost, and the stress that it brings. So it's like, essentially, it's like having your own PA in your pocket. We're a small team, but we've got the right combination of skills of sales, commercial, design and product, supported by our dev partner, Founder Lightning, for this stage of our journey. Our model's B2B2C SaaS, and we are currently, we're at pre-seed, and we're currently raising 200 at pre-money valuation of 1.3. We've secured half of that, and that's allowed us to start the build of our product with a January launch on target. So why Docket? Bill Gross, the founder and chair of technology incubator Idea Labs, says that the most vital factor to a startup success is timing. COVID sped up the digital transformation by many years of technology and changed consumer behaviours and perception, making the time for Docket now. I'd love the opportunity to tell you more. And thanks everyone for listening.
All right, over to you for feedback.
That was awesome, Catherine. Thank you for being brave enough to be the first one to go. It's definitely one of those solutions that we've been focused on to look at as well, especially as we think about workforce equity in terms of the thesis standpoint. I like that you were very crisp and managed to get a lot within the minute or two. Also like the fact that when you were articulating the problem, you used the average numbers. I was typing out notes and then I said, tell us where you're looking at within this number, and you said the UK, so that gave me a clue. Would have really liked to kind of say, okay, I'm starting out with the UK, this is where I'm going to do my solution, but then go global. And I know that you've weaved it in different ways, but being very crisp with that would have been helpful too. It's very minor improvements in there. I love the personal angle as well, because that then shows me that you're committed to this longer term, and it's a problem that you're willing to solve. And then I think the one thing that I'd put a little bit more emphasis on when you're pitching is the talking about the solution itself. I think the distribution model, and then when you said this is what you're raising, came too early and too quick. So for me, it meant, oh, okay, I didn't actually get enough chunk of what the solution generally is. The other thing that I think is relevant for the entire group in general is knowing exactly what your company is. And so a lot of the times, especially in Europe, I think we're married to B2B, we're married to SaaS so much that we do kind of market our products that way, which can mean that when investors are looking at your deck, they're holding you to a typical or a particular type of standard. And what that then means is that they're expecting you to be a type of company. And then if it's not, it might be a disconnect. So just as a general flag to everybody. But Catherine, thank you so much. And if you do need other feedback, feel free to reach out.
Oh, thanks very much. I'll connect with you on LinkedIn if that's okay. Appreciate you. Thank you.
Wonderful. Okay, Maria, you are up next.
Hi, thanks to everybody. I'm Maria Bruna, founder of the Shami LLC, which is a space tech startup. We are enable digital space tourism by creating an hybrid metaverse and virtual reality platform. Space is the next frontier, and we all know this, but at the present moment, only billionaires and astronauts can be protagonists of the modern space rush. The remaining 99% of the humanity is excluded from the space rush. And for us, this is a very huge problem. So we want to transform our customers into protagonists and into digital astronauts by providing an immersive space experiences. The second problem we want to solve is that the metaverse is a huge opportunity, but is still unexplored or only related to the entertainment and the advertising sectors. We want to show that metaverse can be also educational, scientific, and it can become a channel to live something that in our daily life we will never have the chance to do for real. And the third problem is about the virtual reality wearables, which are still a niche products. We want to transform them into a massive market opportunity and massive products. This is how we want to solve this problem, by creating a platform with a monthly subscription, so following a business to consumer model. The revenue will come from the subscriptions, but also the platform will be split into a basic and a premium one. The premium one will require the virtual reality wearables to express the maximum function. And this is how we want to address the problem and transform the virtual reality wearables into a massive product, lowering the entry barriers for customers, so making them for easiest access for everybody. And the opportunity to exploit at the same time the space interest raised at the present time with the space rush and the metaverse power lead together to a very important opportunity that can last in time, because the space rush is just at the beginning. We acquire our customers following the interest for the space, and our main, at the moment, our main distributor is exactly the NASA, because each time that the NASA, for example, launch a new space mission, the attention that it raises around the space can become our main channel to approach all our potential customers. Thank you.
Maria, thank you so much. Love a woman in space tech. Very, very good on you for doing it. I think from the pitch perspective, one of the things that is just fundamentally, I think, clear is that you identified a problem, and then you identified a growing sort of hype to connect it together. And I think that will appeal to investors. But I think my major feedback to you is just to articulate a little bit further what the pain is. So at the minute, it's aspirational, and that's fine, and that's totally fine in terms of why people would want to experience space tourism. However, I think looking at, even if I compare the times that I've been to museums and checked out and participated in space VR experiences, I'm probably a very small fraction of a population as well that's doing that. And so it's segmenting your population and saying, okay, who specifically will be interested in it? Why is this so exciting to them? And why is sort of it's painful enough not to be a real sort of avenue for them yet? And that would be a lot more, I think, exciting to me from a problem and a solution relation, rather than just saying, okay, this is we're doing it to kind of beat the space race and get ahead of time. That's one. And then the second one is, I know you guys are still figuring out business models overall, but subscriptions generally are hard, especially in a market like this, and we're all trying to actually get rid of our Netflix subscriptions and so on. So would love for you to think through what the best distribution and pricing strategy and business model overall is as well for this.
Yes, thank you very much.
All right, wonderful. Okay, Rebecca, and if you want to go on screen share, Perry enabled it, so you should be able to pull up your slides. Perfect. Okay, I'm going to hit the timer now for 2 minutes. Oh, your screen just went away. I can't. Oh, you're on mute.
This isn't going well, is it? Sorry. Can you see the whole slide, the whole screen slide?
Yeah, perfect.
Brand Champion. Okay. Thank you so much. I will stick to the 2 minutes. I'm so sorry for being a bit late. The Brand Champion Bootcamp. Who's it for? So imagine the fact that there are hundreds of thousands of people, founders, senior executives, people around the world, and I'm focusing here actually just on the UK, who have to represent their business. They have to step up and be super successful in being succinct, in presenting well, in handling multiple opportunities like speaker engagements, panel discussions, podcasts, media interviews, you name it. I have trained hundreds of spokespeople around the world from these brands. I am a respected and amazing, apparently, trainer in terms of delivering media training and presentation skills training. But the problem has always been time. There is only so much that you can share in a workshop, and those workshops tend to be identified as a need by a corporate. And so if the corporate's not paying the big money for you to be able to access this media training, you're pretty much stuck. So I have created, pre-seed, this particular business is post-product pre-revenue. I have collated all of my 25 years of experience of training and providing this training to huge brands into an accessible training platform, 9 modules, bite-sized videos, audios, transcripts, plus 2 hours of live coaching that people can choose 1 hour in 2 blocks, group coaching calls that they want to attend when they are ready to attend them. It's also been CPD certified. I needed to do that because I wanted to really focus on a target addressable market that would really need this. Very quick snapshot, unit economics, 997 per unit, per access to that e-learning resource portal. And basically the bootcamp program with live coaching calls is 997 for a 6-month access. Because it's already been created and actually the IT involved, it means that 10 units sold will already get us to £975 gross profit. The more units sold, the more profit. Break even for all of the marketing, finance, legal, all of the things that I've identified would be needing to sell 277 units. And for a 500,000 milestone for the turnover, that's what I wanted to achieve, I need to sell 501. The e-learning market is set to grow. It's in a business area which is going to be expected to be billions, 11.57 billion by 2026. 2 pillars, individuals, in thirds, CPD members, SME leaders and startup founders, and then pillar 2 is corporates. The CPD market itself has 1,400 professional bodies. The Chartered Institute of Marketing, where people do need presentation and media training skills, 30,000 members. I'll leave the other figures there. If only 1% of Chartered Institute of Marketers accessed this course, and combine that with SME business leaders, which was the third point, but I'm trying to whistle stop tour, you could actually have 730 units sold. If only 1% of the CPD market, which is 1 million people, members who have to achieve a certain number of CPD credits each year, it would be 10,000 units sold, which would be a profit of 9.7 million. So this is just 1/3 of one pillar of one market. Break-even costs plus additional ATL budgets require, because I need to get this off the ground, I'm only one person, I've got the day job, requires an investment of 420,000. I'm putting in here for 10% equity. It's a high growth business. And like I said, 1% of a third of a pillar is a 2.3 return just on that tiny piece of the pie. There is a future roadmap scaling up outside the UK and beyond in terms of geographies and subscription models, which I'm not even looking at. This is just the unit price right now. Validation, I'm low on, but actually I'm going to be opening it up, and I can't see if my 2 minutes is up because I can't see anything.
We're past time, Rebecca.
Then please shout. Sorry, I should have said that. Shout because I can't see anything. So I'll stop there because that's only fair on everyone else. Sorry. And I'll stop sharing.
No. I appreciate you asking about time though.
No, I just suddenly thought, I'm sure that's more than 2 minutes. So apologies, everybody.
Okay, Swarnali, feedback.
Yeah, well done you for preparing slides for this. I think I'm gonna go boom boom on the feedback. So one thing, love the fact that you kind of said that this is why you're the best suited to do this. But there was this one moment which I picked up on, I don't know if anybody else did, but you said, I'm a respected trainer, apparently. Take that out, don't say apparently. I know
I'm going on quotes.
Yeah, but women, we do this to ourselves a lot, so just don't.
I'm amazing.
Yes, you are, and stick to that. The overall feedback is, I think when you start articulating your product, start telling the story right from the beginning of why people would need it. I think by the time you come to TAM, it's just too late and you've lost my interest later in the deck. And then overall for the rest of the bits, I think it was just too detailed on the calculations and how you walked through that. Yeah, I don't think anybody wants to see the equations on pitches. Unity cons, you don't need to read out the numbers or say to that level, especially if it's a 2-minute pitch. Just say you'll be profitable in X years. We know you've done the math, but if somebody wants to dig down, they can do that. And then the market needs to come first, but it's also too detailed in calculations. So what I would do is keep the future roadmap and say this is what I'm planning to do moving forward, and then say, this is a big you've already touched on the market, and then you'd say this is how I'm planning to scale the business, and then the last slide could be, okay, this is what I need you to do for me to be able to scale the business. Put the amount, put where you're going to allocate that amount, and that's it.
Brilliant. Thank you so much. Thank you.
All right, wonderful feedback. Okay, I'm going to try to get through 2 more. We only have 7 minutes left, so we're going to be strict about the 2 minutes, and let's try to get through both Jody and Parks. But I believe Parks, that's Liv, right? I think it's just using it. Yeah, okay. So Jody, you're going to be up first with 2 minutes.
Since I can do it, I might as well. Okay, so my name's Jody Frank. I'm the founder of Culineer. Can you hear me?
Yes.
Okay.
Yes.
I'm the founder of Culineer. Culineer is the very first CRM platform for the farm to home table market. The addressable market is $70 billion in size in the US, but this is a global situation. There are about 2 million farms in the US who sell direct to 96 households. The biggest problem that we see for farmers in farmers markets is retention. And that's who our target market is. So we have farmers markets, farms, and home cooks. The problem with farmers, like Farmer Fred here, he's super busy as a young family. He's motivated to build a business. He may be the first generation farmer. He sells through multiple channels and he experiences a 50% churn rate in the CSA, which is the foundation of his business. And the available products out there are fragmented and don't meet his needs. And then we have the home cook that he's selling to, who enjoys cooking for the experience. These are generally millennials and Zoomers. They're willing to pay 20% more for local produce where they have transparency of how it's grown. The problem is, for generations, they haven't seen food being prepared that's whole and fresh. They get stuff out of a package and they throw it together, so they don't know how. And the product is the #1 reason they churn from the farm. And then we have our market managers. This is actually going to be our very early adopter, because we're finding that they get this really, they don't need a lot of education to learn how to use a CRM platform to build their retention. Market managers, they are hired by a board, they recruit vendors, they manage events. They have no way of capturing leads unless somebody just follows them on Facebook. They literally do a head count every hour to see how they're doing with foot traffic. Culineer solves the problem for all 3 of these groups. It's a CRM that allows the farm and the market to stay.
Hey, Jody, we just hit 2 minutes, so wrap up your few sentences quick.
It allows farmers and to stay on top of mind for the customer. And it is a $70 billion market, which rivals the online grocery sales. So I'll stop there. Thank you.
All right, time for feedback.
Thanks, Jody. Thanks, Emma, for keeping us honest. I think the market size as well. I loved the fact that you framed the problem really well, Jody, right from the get-go. It's the churn. This is my target market. This is who I'm kind of going through. I think the user personas are really great, but they took a lot of time within your pitch, right? And so if there's a way to kind of put all of the user personas, not the detailed characteristics, but just some faces, and kind of then say, okay, these are the users that actually make up my target market, and bring that right up top. I think that would do you a big favor. It took me a while to get to the CRM bit, of course, because the pitch, but also I think answering the question, why is CRM the definitive answer to this problem, to solving the churn problem early on, would be super helpful.
Okay, thank you. That's great feedback.
All right, perfect. I think we'll have just enough time for you, Liv. So 2 minutes. Oh, you want to go in screen share mode, I believe, right? Okay, pop
Can you
your
guys
slide up.
Can everyone
Perfect.
hear me?
Yes, take it away.
Fab. Great. So hi, my name is Liv. I'm the co-founder and chief customer officer of Item, which should be popping up just now. An intuitive, personalized shopping experience, made to order apparel, and a more sustainable approach to fashion, powered by machine learning and AI recommendations. We've identified 4 key problems within the menswear area, informed by our own market research, in areas such as size, style, customer experience, and sustainability. Standardized sizing came about in 1939, but it doesn't account for individual variations such as a wider chest, broader thighs, longer arms, for example. And inconsistent sizing is present both brand to brand and even within the same brand, causing a third of all returns. In fact, 70% of returns are due to poor fit and style. Which brings me on to waste, a huge problem within the industry, the wider issue being sustainability. However, 80 to 90% of sustainability of a clothing item can be determined by decisions made during design phase. So what is the solution? Item, an AI framework that acts as a substitute personal style advisor across any touch point. It's an experiential catalyst in buying fitted, customized, and personalized men's fashion based on a proprietary styling model we call the iterations of man. We want to inspire men to take back control of their style, the way their clothes fit, and in turn, the way they feel. We're building both a brand and a platform that will both change the way that men, and in the future, all people shop, but also disrupt an industry struggling to deliver on a sustainable output. We believe the opportunity lies within a combination of these 3 areas for both market differentiation and growth. There are opportunities for tech IP within machine learning, sizing and personalization, AI recommendations, and made to order apparel combined together. So where are we? We launched our MVP last December to inform the machine learning, to capture size and style information and confirm accuracy. And we saw a huge benefit in terms of unique visitors visiting our platform, over 370, with a conversion rate of 33%. We've since launched our beta in June, and we are now working on our future product alongside our second innovation project with Stirling University on our AI recommendation model. The outcome of this project will allow the customer to create their own personal wardrobe using AI recommendations based on cultural identities and style profiles. This is a complete unique user experience, including features such as cultural profiling, accessing consumer insight beyond just clothes, social sharing and engaging in tribal behavior and dressing, gamified experience and
I'm
interaction.
just going to jump in. We're right at a little bit past 2 minutes.
Okay, and reward-based incentive engagement and consumption. There is a substantial and growing market at 3.5 billion, increasing by 12.5%. And we have an experienced team across both retail, tech, and also marketing. We're raising 500K and currently have an opportunity to co-invest alongside Scottish Enterprise. Thank you.
Okay. Take it away.
Thanks, Liv. I think overall, I know 2 minutes is short, but crisp enough. That few minor sort of adjustments that I'd love to share back. Love the problem articulation, but I think I'd put in the opportunity page before the solution page, and then after opportunity, talk about the TAM. I think that's just a general comments for everybody. Talk about the TAM and the opportunity right at the get-go that then gets your investors' attention hooked on, right? And then I think when it comes to the solution overall, again, again, general comment for everybody, have screenshots. If you've got a prototype, if you've done a proof of concept, have that so people can basically then see, oh, okay, this is the solution that actually works in that problem area. It comes a little bit later, your screenshots, Liv, so we'll definitely bring that up. And then in terms of, I think the key thing that I was talking about before is, how are you distributing? How are you going to market? Who are you selling to? And how are you acquiring those customers? That piece has been missing from a lot of today's pitches. So it would definitely build that in. I think that is something that is very critical at the pre-seed seed stages. But overall, great pitch.
Wonderful.
Thank you. I mean, it's my 8-minute pitch, not my 2-minute one, unfortunately.
All right, wonderful. Thank you so much. And thank you for waking up early. I know you mentioned you're on a bit of a time difference right now, so appreciate the early morning. And yeah, thanks for joining us. Founders, stick around. We have a peer-to-peer session, and wave goodbye to Swarnali.
Thanks so much, everyone. It was a great start to the morning. Good luck with the rest of the program.
Thank you.
Thank you. Thank you.
Thank you.
Thank you so
Bye.
much.
Thank you.
Okay, founders, we have our peer-to-peer session now. If you were here last week, you'll have already been assigned to a group. We're going to be in the same groups for the duration of the program. If you were not assigned to a group last time, stay in the main room as everyone goes to the breakout rooms, and we'll put you in a room. A few reminders: make sure your camera's on during the breakout rooms. It's really awkward if they're not. So flip those cameras on. Try to avoid places where you have a lot of background noise. And then can we put, oh, Perry, did you just put a spreadsheet in? Perfect. Okay, so check there if you need to reference what room you were in, and then we'll be using the same format that we were using last time. So go through all of the questions on the spreadsheet, check in with the goals that you set for yourself last Thursday. Did you hit them? Did you not? What did you learn? And then go through those questions in the group and fill out that chart as usual. Probably are familiar with the format now, but that's just a quick reminder. Also, the sessions with dBite tomorrow, I think we have 1 or 2 opening slots still. So if you want to grab one of those, put your name on the sheet ASAP. We'll be sending that over to the dBite team right after this session. So if you want to get the last slot, make sure to do that now. Other than that, I think we're ready to open the breakout rooms.
Yeah, just so for now, Emma just kind of mentioned this, but the breakout rooms are set up so that you can move yourself. So when we open the breakout rooms, if you were in maroon, purple, green, pink, please just move yourself ASAP. If you cannot move yourself, let us know. And then, yeah, if you haven't been assigned a breakout room yet, just stick around and then we will assign you to the red room, and you can put all of your details on that doc. Once you've gone through the questions about what your goals are, just remember, use this group for any feedback. Do you want to get some pitch deck feedback? Do you want to get some product feedback? Are you having a particular challenge with outreach to LinkedIn? Rather than just talking about what you've been doing and what you're going to be doing, ask for help. It's the best way to get the maximum amount of value out of these people. So I'm going to open the rooms now. So you should have an option at the bottom of your screen to be able to move yourself to one of the colored rooms. So we'll just go ahead and let everybody move themselves for a few minutes, and then anyone else just stick behind. I'm just going to stop recording as well.